Thank you again for joining us this week on this edition of Your Mortgage Process. I'm really excited to announce our guest today. His name's Dino DeMoro, executive broker at Keller Williams Realty. Dino's been in the industry for 19 years, sits on the board of directors at Monmouth County, Ocean County Board of Realtors. He's on the multiple committees there to include the MLS committee. He has about 1,500 agents that roll up to him in an executive broker capacity at Keller Williams, and he is tall, dark, and handsome.
Thank you. I'll take that. I'll take that.
So, Dino, tell us a little bit about it being an executive broker. What does that involve?
So what happened is, we kind of stumbled on the opportunity, full-on nepotism, basically. My mother is the broker owner of the company, and starting in 2003, there were 10 of us, and then I was taking out the trash, and I was, answering the phones, and then I was a buyer's agent, and then I transitioned over to focus on listings, and then I don't know what happened. So we have, as the company grew from 10 of us to 1,500 plus. It just got too busy, and Adele wasn't able to answer her phone. So I make fun of a little bit. I have the job because Linda Hune, who is our, she basically was answering the phones at the front desk, and people are calling for Adele, and she's not picking up, and they need someone to talk to and someone to complain to. And so it turned to, I was answering calls about complaints. And so that was about...
That sounds like fun.
Yeah, it was good times. It was good times. So it was about 7 years ago. I think I was getting transferred to Dino. His last name, the same last name. So that's how it started. And over, I'd say the past 4 to 5 years, really, as I got more involved in the board, and again, a few years ago, 2017, I was installed as a director, and then and before that, I'm still on the MLS committee for like the past 7 years, approximately 6 or 7 years, and it was a strategic planning committee for Monmouth Ocean Regional Realtors, and essentially that gave me a good background because I was able to hear all the rules and regs, and of course our industry is like it's always changing. There's always a different dynamic, especially with technology. It's we talk about going back to 2003, Realtor.com had just come into the scene. No one knew how to use it. Not even, my mom was the listing agent back then. Nobody in the industry knew how to use it. So I would go from the back end, and I got all the Realtor.com leads, the buyer leads, because no one else knew what to do with them. So anyway, but now we go from that one source of internet buyer leads that turned into then, well, now who doesn't go on their mobile device, on their phone, and look and just hit? Okay, well, there's 50 houses around me, active and pending, and all the data is right in front of you. Mm-hmm. So with that comes changes in how we handle the industry ethically, how we deal with each other, how we deal with clients, with sellers and buyers. And so as that is ever changing, I became the liaison to communicate a lot of that information. And since we're going from office to office, so one of the things I do is try to go from office to office, and just basically take what I learned. Hey, this is changing, guys. This is what's happening. This was just voted in. This was et cetera, and just try to just educate and inform. And that went from an accident to now a passion, and that's really what happened. So.
Sure. Well, I mean, you look at the past 19, 20 years that you've been in the industry, the biggest change has been technology over the course of that time frame.
Yeah.
So when you look at some of the, I wouldn't say complaints, but some of the issues that pop up in your world, where do you see a lot of those coming from? Consumer standpoint, broker standpoint, agent standpoint?
So our number one, one of the number one issues that we deal with, of course, is agent to agent. And unfortunately, the pie got really small. It was joking. I pulled the stats. Monmouth Ocean Regional, they sent out their stats yesterday, and so we were actually talking about this. Hold on, I'm gonna have to grab these. I can't see.
You look good in glasses.
Thanks. But Joe, we were talking about it from 2021 year over year to 2022 for the month of February, there's actually 39 and a half, like basically 40% fewer listings than they were a year ago. Now, of course,
Wow.
the median sale price went up 5.5%. But then when you look at even the condo market in Monmouth County, I mean, there's 53% fewer listings than there were a year ago.
Sure.
And now,
So how's that impacting the consumer? How's it impacting the agent?
well, so now I was saying we went at the peak of the market in 2006, well, let's just say January 1 of 2007. Back then we were Monmouth County Association of Realtors. We had, I think it was 12,500 or 12,600 agents. Now we're, well, then of course, going back to, let's say the bottom, which was like, let's say January 1 of 2013, we had lost a significant, almost half of the agents. We were down to like 6,500 agents.
After the
And-
crash and like 09.
Right,
Okay.
exactly. From the crash, we lost agents year over year, 2008, 2009, 10, 11, 12, and we didn't really see any recovery till 2013. But from 2013 through now, we went from literally a little over 6,000 agents to now 15,000 plus agents
Wow.
in Monmouth and Ocean County as members of our board. And also now you basically more than double the amount of agents, but you take half of the inventory, well, the pie is only so big.
Right.
So we have a lot of agents. So number one issue we deal with is like procuring cause, who's entitled to what client, who met who first.
And for the average layman, home buyer
Yeah.
that maybe listen to this, what does procuring cause mean?
So procuring cause is really just the definition of it. Who procured the sale, who began the sale, who created the desire in that buyer to purchase the home. And so typically that is awarded to the agent who spoke with the buyer initially and brought them into the home and toured the home and said, oh, do you want to buy this house? And at that point they, oh yeah, I do. That's usually, so now of course it's very rare that it would be awarded to an agent who didn't show the house first.
Makes sense.
So, well, unfortunately, because in this market, the buyers are desperate, and so they go and they'll just call whoever will answer the phone. It's, oh, I'm sorry, Craig, I know you weren't available at 4, so at 4:01, I just called whatever number I could find, and I had that agent bring me to the house because I wanted to get in right now. And so,
Yeah. And you know, from the
led-
consumer standpoint, you kind of see it, right? So
Right.
there's such a frantic mad dash
right,
to get in to see properties because there's such limited inventory, to your point, Dino,
exactly.
that they just pick up the phone and calling someone else.
Right. So this has created animosity between agents and brokers. And of course, so I try to go in whenever there's these situations and try to be sensitive to both sides.
Sure.
But the rules are the rules. And so we kind of get stuck with that a little bit. And
I would think that,
not
you know,
always
when you
fun.
look at the amount of agents, it's basically doubled
Yeah.
in what, a 5-year time frame, Dino?
about 8 to 10, let's say 10.
8 to 10 years. There's experience issues in there as well, right? I mean, someone like
yeah.
yourself who's been doing it for 20 years, but you
Yeah.
kind of know how to play nice in the sandbox and facilitate the transaction.
Right.
But you look at the influx of people that have come in even in the past 3 years, that's got to create some challenges.
Well, so for the newer agents, especially right now, we're going, right, it's 2 years ago, right? COVID lockdown started 2 years ago. I mean, people were stuck home. Everyone went and got their real estate license. Why not? I could do it online. Anyway, so we saw a major increase in licensing over the past 2 years. And now they don't know, because this is the only market they know, is the insane market.
Mm-hmm.
And so, I mean, COVID came out mid-March. We were in lockdown. It was March 17th. And then now move forward. No one showed houses in March. We weren't allowed, right? And then, well, April came. And then I think in May, Governor Murphy said we're essential workers. So, okay, fine. So we sat home for a couple of months, and a lot of people went and got their license. And so basically since May or June of 2020, those influx of agents that came into the industry, literally a few thousand in our county, in Monmouth and Ocean counties, well, they don't know any different.
Mm-hmm.
They don't know any differently. This is the only market they've ever experienced.
Sure.
So now you look, if you've been in the industry for, more tn 10 years, and for me approaching 20, I know that this too shall end. I mean, this too shall pass.
Sure.
This is a short period of time. I mean, maybe it'll be a year, maybe it'll be 5 years, but we will go back and the market will correct itself, regulate itself.
I think from a consumer standpoint too, it's hard to even envision how much work goes into that.
Oh, yeah.
Right, to make sure that you're balancing all the relationships. I mean, you and I were talking earlier today.
Yeah.
You have a listing that's on the market. How many offers did you get on it?
29.
And 29 times you have to pick up the phone and call every agent.
Speak with every agent, reply to every email.
Sure.
And, so I was one of the not fun parts is that, we get into this job. And so, of course, I enjoy my relationships. One of the reasons why I got involved in the board, of course, is because I used to go to like every event. I went to like every, and quite honestly, initially it was, there's
Well, you're a fun guy, Dino.
I'm a fun guy. I like to have fun. So we'd go and, there's a spring fling and, there's a networking event. There's a networking event. And network who? Anyway, we'd go and I used to love to go to all the events. And then it was, hey, can you be on a committee? So, well, with that, so the positive part about going to all the events is now you're building relationships with other agents and other brokers in the industry. And so, well, over now 19 years, I've made some really great relationships. Other agents, other brokers, I mean, who are technically competing brokerages, but I have great relationships with them. And so we have mutual respect and go out and you can actually have a drink with these guys and girls. And so there's the relationship. So even when it comes to the issues, I think, okay, I've known this agent or broker for X amount of years, and I'd like to continue to have a friendship with them for the next 10 years.
Sure.
So, so I act accordingly. I'm not looking to burn bridges.
Mm-hmm.
A lot of agents who've gotten into the industry over the past couple of years, they don't have that hindsight. Oh, wow, they don't have 10-year relationships. They don't have 15-year relationships. They can't see 15 years into the future.
Mm-hmm.
I don't know how to do anything else. I'm not going anywhere. I'm in. I'm sucked in, right?
Right.
So it is what it is. So now knowing that, I've made myself in this industry like mentally. I have no plan B. This is what we're doing for the rest of our lives.
Right.
And so I have to maintain my relationships, try to play by the rules, try to encourage all our agents to play by the rules and respect each other. And that's a big part of how this all plays out.
Yeah. And you know what? You serve as a great mentor regionally and in the industry.
Thanks.
Everybody likes you, Dino.
Usually, almost everybody likes me.
So,
but that goes back to, right, we have 29 offers, 28 people got bad news.
Right.
So part of my job that I do enjoy is the personal fulfillment of, hey, years ago it used to be, you got the house you love. They're happy, and they call me and they tell me how happy they are, and they're inviting me to barbecues. And, well, I just had to give bad news to 28 agents.
Right.
Who really wanted my buyer loves this house. And
plus empathetic to the buyer.
Mm-hmm.
We went downstairs when Dino was coming up here and he was running a little bit late. So
as usual, sure.
I was telling Nick, the producer, I go, he's going to run 5 minutes late.
Yeah.
But anyway, we're having a conversation about the buyers and how you feel bad about all these people that want this house, but you just can't facilitate it.
No, there's not enough inventory, and so that's not the fun part at all. And it's actually that goes against. You said there's the personal fulfillment aspect of, well, you made families happy, and even in a bad market, the seller would take less than they wanted. You rewind 10 years ago, seller took less than they wanted to get. Buyer paid maybe a little bit more because they were, we're in a declining market and I should be able to get more of a discount. Well, at the end of the transaction, everybody was happy.
Sure.
And the buyers are happy. I got this house I love and I'm going to raise my family. Well, now they don't love it because now many times what we're hearing is that there's not, even when they do close, there's a buyer's remorse and I overpaid. So they're bitter toward this product because it's a product.
Sure. So I have a question for you about that. So I know historically, when you put a house on the market, a $500,000 house on the market, buyers are going to come in, they're going to be under that by a certain percentage.
Right.
Normal market.
Historically.
So when you look at a market like this one, what percentage of properties do you think are going for over the asking price?
Oh, it was like 101% or something like that. It was, let's say the latest stats were, it's like 99.8%. You're getting at asking price or better.
Wow.
So that changed. And so, when I speak with sellers, a lot in coaching agents. You always think of the list prices. Well, that's part of the strategy. Because years ago, we would list intentionally 5% over market value, even at the time, to then build in 2 to 3 price reductions. So you go back 2010, and we would go at the kitchen table, well, we're going to do a price reduction on day 21. We're going to do a price reduction on day 37. And then, okay, and I'm going to do a broker open house on day 30. And then we're going, and so after about 90 days, we should have an offer at about what we think the market value should be. But it's probably going to be 5 to 10% less than market value, and we're going to negotiate that back up. And oh my God, people! Oh, but I paid X amount, and
Sure.
oh, I paid, and theoretically, I paid $100,000, and now it's only worth 90. Exponentially,
So
the number gets
statistically, when you look at that,
uglier. Right.
so we know that houses are selling for over asking price
Right.
statistically right now. And you had mentioned something about that process in a normal market where hey,
Right.
maybe there's a price reduction,
Right.
open house, broker open.
Right.
When you look at it right now, we're obviously not seeing that.
Right.
And so where do you see it going?
So now the fun part begins, because now there's a lot of things going on in the world. Everything from increasing interest rates, rising gas prices, inflation, the war in Ukraine. How that's going to, it's not a matter of if, it will affect us. Right. So now what happens? So when will it hit us? Well, because of the shortage of inventory, the price will remain high in 2022. There's no way around it.
Sure.
There just aren't enough. There aren't enough homes for the amount of buyers. But at some point, maybe it's 18 months from now, maybe it's 2 years from now, probably I believe approximately about then. So spring of 2024, going into 2025, the market will have to correct itself.
Right.
There's no way.
Well, it'll be interesting to see, and kind of going back before about the process before I lost my train of thought before.
Oh, sorry. Before I threw you off. Before I
lost my train of thought. Is, how many days on market? You had mentioned 3 months, 90 days before a first offer came in a regular market. Statistically, what is that today?
Don't we get offers right away?
So from the time it goes on the market, how fast does it sell and close?
So rewind. So for fun, days on market 10 years ago wasn't days on market. It was months on market.
Right.
It was, right. So 10 years ago, you didn't even want to be the first agent. You wanted to get a listing that expired twice so that you were agent number 3. So you were looking at realistically somewhere, it's so horrible. I can't even fathom this as I'm saying it. It used to be somewhere between 14 to 16 months on the market. Wow. At a market value, right? I thought I priced it correctly, or the sellers wanted a touch more. Well, now we do coming soon advertising, which is funny because I actually looked on Facebook memory in 2013. I did a coming soon ad on Facebook. I didn't even know what I was doing. I stole the idea from somebody else, right?
Right.
Like in Arizona, I think. Anyway, I heard about it, so I did it. But now going forward, so we market the house. We have 7 days prior to we can actually start showing it as a quote unquote coming soon. So now it's coming soon, and we're getting offers sight unseen.
Wow.
So technically, you're at 0 days on market, and you're getting offers sight unseen. Now, as the pandemic is waning, and people are comfortable going back into houses again, and we're in, I'm in belief. Most agents are encouraging their sellers, hey, we really want buyers to actually see the home before accepting their offer, right? Because they come in, and I'll be honest, even one of our buyers went, I need this house, sight unseen, and then when they actually saw it, they didn't like it, and then they back out of the deal.
Shocker.
And it's like, I can't believe the pictures were nicer than the house. I can't believe
How's that possible?
Oh my God. Right? Anyway.
It's all about the angle.
It's all about the angle. It's great. But the reality is, what do you do with that? So, but average days on market, we try ethically. I really would like to give every potential buyer, an opportunity to see the home. So, putting a home on the market, that way a full weekend can go through, or Friday, Saturday, Sunday, Monday, so that everyone can see it, is really the most fair way to work with
Sure.
it, but that gives you 3 to 4 days on the market. 5, I mean, in all fairness, you should really, I would prefer giving 7 full days, but I don't get to dictate. There's no industry standard there. But then you have some theory, they just, I'll take the first offer that comes through because it's amazing and shut it down.
Right. And then stealing it from your paper from the time it goes on the market to closing is 38 days?
Yeah. Yeah,
That's
basically,
fast.
That's super fast. Well, part of it is the efficiency of the process, though, because
That's a good point.
how quickly can you get a mortgage done now?
Yeah.
If
Fast.
if your buyer's prepped, and instead of just talking to them, and there's no more, they give you, I make X amount of money. Well, now you're vetting all their information, and
Sure.
so now before the buyers now are more aware that they should be financially prepared. So they're walking into a house, their tax returns are already at your underwriter's desk. And so you put an offer in and they fill out the application and they're moving forward like fast and furious.
Yeah.
And
You're
of
right. I
course-
mean, the mortgage process and understanding that mortgage process, how to stay ahead of it,
yeah.
right, to make it facilitate in that time frame.
So
It's a lot different than it was in 2006. It was just a little bit different from a market standpoint.
Right.
I was reading something today. When you go back to 2006, because we were both in the industry, and we can remember when prices were going up.
Right.
I get the question a lot, well, are values going to continue to go up? And you were speaking to this a little bit earlier. And I would say the answer is probably yes.
Yeah. Yeah.
And I mentioned this last week on the podcast that every index is indicating the fact that property values are going to go up this year.
Oh, yeah.
Big picture, I got some great stats. Here, let me pull out my piece of paper.
Go for it. Let's
All
see.
right.
Let's see.
All right, wait till you see this. So in the New York metropolitan area, which is really where we're at, it's suburban, but still New York metropolitan area, from 2020 to 2021, real estate values are up 21%.
Right.
2012 to 2019, they were up 26%.
Right.
So when you add that up, that's about 10 years. That's up 46%, right? But what it doesn't hedge for is what happened between 2006 and 2012.
Correct.
The market dropped 25%.
There was an overcorrection.
Yep, there's an overcorrection to the market, which isn't normal. Because I hear all the time, I'm going to wait till the market drops, and it's not. That was unusual. That's never happened before.
That was bad.
And my point being is over that 15-year time frame from 2006 to 2021, real estate's up 21%, which is 1.5% per year, which is kind of underneath what the long-term appreciation has been historically over 50 years, right? You'd expect that to be what, 3%?
Approximately, right? 3 to 4. Anywhere in there is normal.
So, and that was New York metropolitan area. When you look at everything in the 10 biggest metropolitan markets in the country, numbers are all the same.
Right.
So yeah, values are up a lot over the course of the past couple of years, but we got all that appreciation back in 2 years.
Right.
But statistically, over a 15-year time frame, it's not up that significantly.
That's key.
And something else interesting is from 1996 to 2006, property values were up over 100%.
Right.
You remember?
I do.
I mean, up over 100%. Some markets it was up almost 200%. So if it's 100% over a 10-year time frame, that's 10% per year during that time frame.
Right.
Time frame we're in right now, it's 1.5%.
Right.
I think we got room to go up still.
Yeah. Oh, yeah. Absolutely.
Right?
So we'll see. That's why I'm sure 2022 the prices will continue to rise. 2023 probably continue to rise. Will they level? And even when we do see I use the word correction because I don't think it's going to be a crash. No, I don't think anyone believes that there's going to be a crash. It'll just be a correction. So the only challenge that comes into play now with inflation on everything else, and did everyone's income go up that much?
Right.
Did the average buyer income? So we look at, of course, is one of the reasons we were talking about earlier. There's average sale price and then median sale price. What's the regular person? What are we buying? If the median sale price for a specific town is $450,000 or $500,000, well, was the average person in that town, how much are they making to afford that? And so, as you go from town to town and you really break it down microeconomically, it's like, okay, well, at what point does it become unaffordable? And that's usually right. That's the breaking point.
That's a great
and
point.
so it'll it'll correct itself just to meet that. Mm-hmm. But now the job market's relatively strong. I mean, right? There's employment everywhere, so that's fine. So let's see how all these other factors play out. And they're gonna, one of them is gonna, or two of them they'll kick us in the butt maybe a little bit, and and it'll be fine. It'll be fine.
Right.
So, but whether it comes for the buyer that's looking, oh, should I buy now? Should I wait? I don't know that waiting is the answer. I don't think so.
Especially if you're renting. If you look at the graph for renting, rents never go down.
No.
You looked from 1988 to today. I mean, with maybe a couple years of flattening in rate. Nick, this is good. Write this down.
Yeah.
There's a little bit of flattening in rate. Nick is our producer. You might remember him from last week. A little bit of flattening, but they go up every year, year after year. It never makes sense.
It never does. It never, ever. Even if you buy high and you get, in theory, stuck in your house, it's still yours. You can still do improvements. You can still put the deck on. You can still paint the house purple if you want to. Good luck telling your landlord, hey, I want to paint everything.
You can use gardening for therapy.
Yeah, you could, right. You could I use gardening for therapy, yes. It's like, there's nothing like getting connected, right? So, yeah, you can do whatever you want to your land, your house. You can't do that in someone else's house. And if you have a landlord, it's someone else's house.
Yeah, no question.
So that's huge. So, no, it's never a bad time to buy.
No. Like we've talked about before, you're either paying your mortgage or you're paying,
someone else's mortgage.
That's it.
And that's all right. I mean, and the only time I do believe in renting is if you're in between, if you're in an in-between phase, you're not sure, oh, I sold my house and I'm not sure if I'm moving to Florida or the Carolinas or California. Well, okay, that's fine to move. I mean, to move into a rental, as long as you understand as a consumer that it's not a good decision long term. Mm-hmm. Renting is using rental properties is a good transition. That's fine. I mean, it's a transition period. It shouldn't be your home. It shouldn't be your home forever. It's never really your home.
Right.
So.
Hey, shifting gears a little bit. So I was in a meeting yesterday with about 50 real estate agents, and we're talking about, well, how's the best way for you to have your offer accepted? What does the buyer look for? What does the seller look for? What are the key components? A couple of things that, and you being an expert listing agent, if you have a house on the market, what do you want to see from an offer that's coming over to you?
So, unfortunately, some people want to buy because they're caught up in the moment, but they're not really financially ready to buy.
Right.
So it's, I know I should buy, but I didn't save any money. I know I should buy, but, that's our number one issue is down payment. So in addition to the price, because sellers, of course, are attracted by a high price. My house is, in theory, market value is $100,000. Mm-hmm. Well, okay. Oh, someone offered me 105. Well, multiply exponentially, but okay, so I'm getting 5% over market value. That's great. Well, it's the listing agent's job to wait, hold on a second. Let's look. Well, they can't close for 4 months, and they're putting no money down or 3% down, and so now they become a great number. It looked really attractive up front, but now, well, versus a buyer that has 25% down. Well, then okay, they're a safer bet, and then we ask for proof of funds. Well, can you, of course, waive the inspection or contingency? Can you waive the appraisal contingency? Well, are they financially capable of doing that? Mm-hmm. So that's come into play as well. And
so to attack proof of funds for a second, all right, I'm buying a house.
Yeah.
So, and all of a sudden, my real estate agent is asking me, show me your money.
Yeah.
Like, what do you mean, show me your money? You don't trust me?
No, I don't. I'm sorry.
It's become a norm, right, in the market that we're in right now.
Well, what we see. So in addition, we see the pre-approval, right? So we get I get an offer with the pre-approval attached.
Right.
Oh, I know. Okay, I know him. I trust him. That's good. But oh wait, they're putting down $100 and something thousand. They're putting down $200,000. I'm the first one to call Greg and say, okay, well, I'm going to call you. Do they have this in the bank?
Right.
And then I'm now as we go higher and higher in numbers, and you're looking at $800,000, $1 million home, $1.5 million. I keep going. Well, they're telling me they're putting down $800,000. Well, can you prove? And if you're not comfortable giving it to me, just let you know. The moment we go into attorney review, our seller's attorney is going to ask to see like your bank statement,
Right.
and that's, you know, do you have that money? Is it liquid? Can you like afford to cover the spread? You know,
Right.
when the house under appraises, can
Well,
you?
and that's another good point. So
It's
another
not going to appraise.
well, and that's another norm that we've been seeing in this industry, which is unusual, or in this market, which is
Right.
unusual, is the waiving of the appraisal. What used to be something that you never saw in the mortgage process, in the real estate process, was we're waiving whatever the value of the property comes in at.
Right.
And now you have to do it, right?
Yeah,
Tim?
you have to. So when a buyer goes forward, and also be, you know, I tell buyers and all of our agents to be specific with their terms, because when a buyer's agent says, "Okay, we're waiving the inspections," no, you're really not, because the buyer is still legally entitled to do an inspection.
Right.
So you can waive the inspection contingency, meaning that, okay, you'll do the inspection, but whatever you find wrong, you're still taking the house as is.
Mm-hmm.
But I would never, even as a listing agent, I would never encourage the buyer's agent and their buyer to not do an
You
inspection.
got to have
That's
an
nonsense.
inspection done, right?
So, and then, okay, well, if we do the inspection, what are we finding? What are the terms? Well, if the house, they find out there's, you know, something structurally wrong, well, that'd be kind of important.
Right.
That may be a deal breaker. The house is sinking, right? The house has cracks in the beam. So there's a structural, right? You put in the caveat. Okay, well, it's as is. We're taking it as is, except for structural. Well, there's also environmental factors that should absolutely come into play. And even as a listing agent, that's completely acceptable. If the house has a below ground oil tank, that's an environmental issue.
Yep.
It really, I mean, no one wants to be stuck with that without insurance. If the house has mold, it's
Right.
an environmental issue that's really
Not to
common.
mention you can't get a mortage on it.
Right, and it's really
without
common.
remediating.
And right, and even if you got covered, somebody painted the wall, it's fresh, they couldn't find it. Well, you're moving into that. You and your kids are going to be breathing that in a few months.
Sure.
So those are things, again, we shouldn't be waiving. The environmental. Some attorneys try to stick in the mechanical, but I'm very I'm the idiot that reads I read everything. So it comes through.
You're
And,
the answer guy.
yeah, I'm the answer guy. So I look and they stuck in mechanical. Well, I define mechanical. Oh, just the furnace and AC. Well, there's not what then put furnace and air conditioning, because mechanical means anything that moves.
Right.
It's if it's a machine, it's mechanical. So they don't anyway. So I get caught up in semantics sometimes.
Just a couple of things with clarity
Yeah.
on that for any potential home buyers that are listening to this is what Dino's saying in reference to your inspection if you're buying a house isn't that you should waive your inspection. You want to know if there's anything major wrong with the
Right.
property.
That's right.
However, in the old days, and I'll define the old days as 3 years ago,
Right.
at this stage, when you had an inspection done as a home buyer, you get this laundry list of things that you'd send back to the seller's attorney. Your attorney would send it back to the seller's attorney saying, I want everything fixed. Those type of ticky-tack things,
Those things are done.
you can't do it anymore.
do
So it's got to
that.
be major.
The faucet leaks. You know what? Wake up early on Saturday morning and fix it. Come on. I really. So no one wants to be arguing. No one wants to argue over those minor issues. They're really honestly even before the pandemic, before the market shifted in this direction, those were still annoying arguments.
You get a 6-page report on everything.
I was one of I get the really, you're really asking the toilet's loose? Do you know it's 2 screws? It's 2 screws. Give me a break. Anyway.
Yeah, I'm sorry about that.
I'm
That was the
worst.
house I was buying.
Oh yeah. Oh, you're so frustrated, right? It's nonsense. We could fix that easy. So, but there are major concerns, and one of the reasons why I always encourage buyers and buyers agents focus on the big stuff, because you know what, you can get really caught up in a lot of the nonsense, and it distracts you from your major issues.
Sure.
And so, don't sweat the small stuff. That's applicable to a lot of different areas in life, not just including the housing market. So now going forward, okay, so they're waiving the inspection contingency. Be careful with your words. You're not waiving inspections. You're not waiving your right to do an inspection. You're waiving the appraisal contingency. You're not waiving the right. The bank said you still have to do an appraisal. You're not waiving the appraisal.
Right.
Unless you're buying cash. You want to buy cash? Then stick the word contingency in there. Well, take an hour or two and read through a contract with a highlighter. Put your readers on. I can't see anymore.
You can borrow
and
mine.
read it, right? I borrowed yours. So, and read through and know what you're getting a buyer to sign. Yeah. Well, you're going to ask someone to invest basically their life savings, their biggest financial purchase. I mean, you're morally and ethically obligated to read the stupid thing that you're making them sign. Know what it says.
You know, and I think that some things that can get overlooked there is a purchase, a contract of sale to purchase a property is a legal document.
It's a legally binding document. And so, and I bring that up because, Monmouth and most of Ocean County, we use attorneys. So there's an attorney review period, but I've done a handful of deals over the years where we didn't use an attorney. Mm-hmm. And so the contract was binding the way it was after 3 days.
Right.
And while, the onus is on me. If I sold my house, if I sold my buyers a bad house, or if I listed a product that, it's on me. And I didn't read the fine print. Mm-hmm. Well, it's our job as realtors to know the fine print. Sure. I mean, really, you owe it to your clients to do that. So, and I don't think it's a big deal, and now as over the years have come on, one of the things you ask, what do I do as the executive broker? There have been a lot of documents added over the years, and some of them amended, some of them made longer. Everything from the contract used to be, I think it was 10 or 11 pages. Now it's, 13? It's 13 pages now. So they added a lot of things in there. Mm-hmm. So if this is your profession, you should read it. You should know. Before you ask a buyer to sign it, you should know what's in there.
That's
you
a great
should be
point.
able to swing it around and explain it to them upside down because you've read it so many times that you know this. So we do that, and you're asking them to sign this addendum. Well, what does it say? The homeowners association. It's X amount of dollars per month. Well, is it going up? And anyway, so I'm going off on the deep end. But essentially, what it is that we as in our profession, we should be reading and knowing. We're not attorneys, but we should have a base knowledge of what these contracts are saying, and guiding our clients accordingly, sellers and buyers, and say this is what this means. Yep. You should speak with your attorney for further clarification, but this is in general what it means. And so going back to, I went off on a tangent a little bit, but I'll bring it right back. Again, there's an appraisal contingency in the contract. So if the house, you purchase a house for $100,000 and it appraises at $97,000, do you legally have the right to renegotiate that $3,000, or are you waiving the right to renegotiate that? And okay, well, if underpaid, you should speak with your lender. Do you have the extra funds to the extra $3,000 that you need, plus and keep your rate that you locked in at, plus whatever the case may be from your angle.
Yeah, and that's a great point. Just to piggyback on that from your mortgage process standpoint, is when you waive the appraisal, if you're doing a mortgage, you can never waive an appraisal that the bank needs done that's lending the money.
Right.
You can waive your appraisal to the seller, which essentially means if the value of the property comes in lower than what you're paying for it, that you're not going to renegotiate.
Correct.
And just because it comes in lower, a couple things happen. You may have to make up the difference. As an example, you're paying $525,000 for a house. Property appraises for $500,000. You have to make up that $25,000 difference.
Right.
Option one. Option two is depending on how much money you were looking to put down, you may just be able to finance that $25,000, and it just changes the percentage of the value of the property that you're borrowing.
That's right.
So there's a lot of solutions to these things, and they're not all deal killers, but to your point before, kind of necessary in the marketplace if you're going to have any shot of obtaining a property.
Right. So I'm going to switch from the factual to my opinion now. Because, there's...
this is where it gets good.
This is where it gets juicy. Now, it doesn't get really that juicy. In my opinion, if you negotiate the price of anything, a car, a house, your iPod, it doesn't matter, right? Whatever the case may be, you decided...
I didn't know you could negotiate your iPod.
I don't know, whatever.
I like how you roll, Dino.
I'm negotiating everything. I'm negotiating. I'll give you $10. I'll give you $10.
You want my shirt?
Yeah, right.
15.
Your glasses. I want your readers. $5. I'll give you $5. But you negotiate. But after you come to an agreement, I personally, whether it's a strong seller's market or a buyer's market, I like the appraisal waiver, the appraisal contingency concept, because you already agreed on a price. You should give up your rights to renegotiate later on. Mm-hmm. Now, granted, the inspection is different, but there's certain things. That's why I always encourage every seller Disclose, disclose, disclose. Oh, you had some water in your basement? Yeah, tell them about it.
Mm-hmm.
They can't, well, they find out later on. They're either going to back out of the deal or try to negotiate money out of it.
Sure.
Oh, this is broken, or this is, whatever. Your furnace is 47 years old. You should let them know, because realistically, they're probably going to have to replace that in 2 weeks. So,
It's about the transparency, yeah.
Right. So if you're transparent, as a seller, you eliminate the buyer's right to renegotiate in a sense, and that's fair. The only thing I don't like is, and this is my opinion, is when you're renegotiating later on. It doesn't feel right when it's what you're just trying, as the buyer's trying to get away with.
Sure.
Because we already agreed on this.
I mean, at the end of the day, it seems like the most seamless transactions are the ones in which buyer, seller, the attorneys involved, and the agents involved feel some sort of fiduciary responsibility to each other.
Correct. Yeah.
Right? And you do everything with transparency.
I agree with that.
A question for you on loan types, because this comes up a lot as well, is in today's market, when you're putting an offer in, is there a difference if your loan pre-approval is a conventional mortgage, an FHA mortgage?
Yeah.
What's the best type of mortgage if someone needs one right now, from your perspective?
Unfortunately, we, every listing agent who's had any kind of experience has some fear about VA and FHA.
Mm-hmm.
So we talked about that. Basically, with the VA, of course, the buyer doesn't have to put any money down. The seller's perception is, well, they have no skin in the game.
Right.
Then, of course, with VA and FHA, there's all kind of stipulations to the house itself. God forbid there's a
Railing missing.
Right. Railing missing, a window's broken, there's some paint that chipped in the back of the deck, but it chipped, so you got to repaint the whole deck, right? So there's all these things that sellers are afraid of. Years later, I'm not afraid of them, because essentially I could tell the seller, hey, these are some of the things that we're going to get, that are going to be just stipulations to get the deal done. So, and we can just avoid that. We can even make the buyer pay. In this market, you can say, hey, these are the things that we know we're going to have to do. Mm-hmm. It's on you. We're disclosing that these things have to be done, and it's on you. So now, the only thing that is a fear is that in this market, with a buyer that may be paying more, is a low appraisal, and right, because VA and FHA, it has to sell at what it appraises at.
Yeah, great point.
So it makes it stickier.
So it doesn't necessarily have to sell for what it's appraising at. It's kind of more, they generally on those types of loans, we're just not putting a lot of money down, so there's a lot of money to work with.
Right.
But I would say, we were talking a little bit off camera earlier about VA loans. And if someone does have, you can put 0% down on a VA loan. It's one of the great things the government does do for veterans, because all veterans should own a home. And I think we'd all agree with that.
Yeah.
Even if they can put down some sort of earnest money deposit, $10,000, $15,000 to have skin in the game on it, they can always get that money refunded back at the closing, but it'll help get the offer accepted.
Right, exactly. So we know that they're not just going to get up and walk. They can, of course, use it to pay their closing costs. They do all kind of whatever. They got a check at closing that they can then use to buy furniture or whatever, paint the house with. So that's all well and good. I think that's really the best strategy if you're going to go with a VA type loan, or VA or at FHA, any government funded. So that would be the only concern. Because the safety net for the seller is, okay, well, these buyers are putting down X amount of money. They're putting down X amount of money up front. They're bringing X amount of money to the closing table. So, I mean, I had a negotiation last weekend where, well, the seller overpriced their house a little bit. So the seller didn't get full price. Multiple offers, not full price, which proves you can overprice the house in this market, which is fine. But now the key factor that came into play there was, well, they said, what is that? The listing agent told me, I was representing the buyer, hey, you know what? Your buyer's not putting enough money up front, like for their deposit in escrow. And I'm like, you know what? You're right. So, hey, buyer, I just won't say his name, but you know what? Can we increase that down payment to like at least $50,000? It was a big purchase.
Sure.
Oh yeah, you did the loan. You do the loan. So anyway, sorry. So
he's a good guy.
Yeah, he's a nice guy. So it's, hey, and he's like, yeah, sure, I have it, no problem. If that's going to make the difference, he was totally agreeable. But he's like, yeah, all right, that's fine. I'm like, he's why? He said, well, they just want to know that you're all in. They want to know you're all in. That the minute you find out the light bulb in the bathroom isn't working, you're not going to walk away.
Right.
we know, and that is a big deal because purchasing, as we all know, we've all bought. It is absolutely an emotional purchase. It's emotional roller coaster up and down. Then
Right.
there's the, oh my God, wait. And then, oh, but wait, oh, the house is great. Oh, wait, but they found what in the home inspection? Oh, up and down. Then there's, oh, I brought my family, and there's the excitement. Oh, we're gonna have Sunday dinner here. And I mean, up and down and up
Yeah.
and down. So while the buyer is going through these ups and downs, what guarantee does the seller have?
Right.
So as a buyer, what things can you do to make the seller at ease? And again, we talked about earlier transparency and open communication. That doesn't just apply to your marriage. That applies to your relationship from buyer's agent to listing agent. It's okay.
Well, you're married to the job.
Yeah, right. We're married to the job. It's true.
No, he's married to you, Janine.
Oh, yeah, right. So, but the key factor is, you know what? There's nothing wrong with picking up the phone and calling the listing agent. Hey, what's the salary you're looking for? Do they? Oh, they need 4 months because they're moving to fill in the blank.
Right.
Well, okay. Can we accommodate that? All right, great. That's a plus sign in our favor. And so it's not just about the number. So there's plenty of other things that we can do to really put them at ease, put that seller at ease. That you're not walking away. You're not going to have buyer's remorse, and that you're going to be accommodating to their needs and vice versa. And that requires some type of communication. That requires a conversation.
Sure. Well, I'd like to pick back up on this topic. Let's just take a quick break.
All right.
We'll come back to it.
Cool.
And we'll pick up in just a minute. Well, welcome back, everyone. As a reminder, we're here today with our guest, Dino DeMoro.
Thank you.
Dino, I really appreciate you bringing that bottle of Makers in here. It was a good halftime break that we had.
Next time.
Right. Unfortunately, the answer is no. We weren't drinking in between the set.
We should have, but we did not.
Hey, I wanted to pick up where we left off in reference to what makes a good offer from a buyer for a potential seller. We had already touched base on waiving the appraisal, waiving non-major things with the inspection,
Right.
Down payment, mortgage type matters. How about a possible lease back? I had heard that the other day.
So yeah, that gets tricky.
Okay.
So one of the number one factors that comes into play is as a buyer, we're putting homes on market. We're putting offers in on homes, and well, those sellers have to go somewhere. So sometimes we have the luxury of a seller that's already purchased. They know where they're going. They have a second home. Their new construction will be built. Those are all great scenarios. What about, well, we can't sell unless we buy. So there's that, it's referred to as a relocation contingency. Sellers, and you'll see it in sometimes public notes and agent notes and in the MLS. Contingent upon seller's firm relocation. We see that. That means.
Do you think it helps if a buyer's coming in and saying to the seller, "Listen, I know you have a place you have to find or you have to move to. We'll lease back the property to you for 60 days," as an example.
Right. So, well, there's two parts. Number one, the seller can't buy because now they're a buyer. They can't really buy. It's very difficult to buy with a home sale contingency. Well, when they're competing with cash offers and offers without home sale contingencies. So, and home sale contingency, point blank, means I have to sell my home in order to purchase. And you have to be transparent about that because, well, that's where the equity is coming from. So it's attractive to hear a buyer say, okay, we'll close on the property in 30 days or 45 days. And, well, we'll close and you can live there and rent from us. Legally, you'll see the term as a use and occupancy. You'll hear it referred to as a U&O. Attorneys do not like U&O. They just don't, rightfully so, because there's insurance liabilities.
Sure.
There's potentially damage to the house. Well, what happens on, day 30-something when, they burn the house down. That's always my favorite when attorneys bring up the worst case scenario. So you have that. And then, but more likely is, well, what happens if they don't find a house?
Right.
Well, they have the benefit of sitting in the house that you now own, and they're sitting. They have your money, and your house.
Right. Right.
So it's very tricky. So attorneys
Yeah,
don't
great
really
point.
like that for good reason.
Okay.
You can work that out if everyone has the best of intentions. It's not impossible.
Mm-hmm.
In my opinion, it is attractive. But again, you have to convince multiple parties. You have to convince your seller it's a good thing to do. The buyer has to be convinced it's a good thing to do, and both of their attorneys and realtors. So
And a lot of moving parts.
So there's 6 moving parts to that, and it doesn't. It's challenging. It's not a bad idea by any means, as long as everyone is going forward.
Yep, makes sense.
So,
Next question for you. So you have an offer that comes in, and you have a mortgage pre-approval, because every offer that should be being sent to you is a complete contract,
right.
not a partial contract, complete contract
Yeah.
with a copy of a mortgage pre-approval. Does the lender matter?
Yeah. Yeah, absolutely. So, I mean, I hate to say it, we're local. I mean, like I said, we're doing this long enough here in Monmouth County. And so now I get, yesterday, get offers, and I look at the contract, look at the addendums, look at the pre-approval. Oh, I know that lender. Oh, yeah, I know. Okay. Oh, yeah, I know that company. Oh, they're right in Toms River. Oh, they're right in Ocean County. Oh, these guys are right in Red Bank. These guys are right in Homedale. So that absolutely matters because there's a level of accountability.
Right.
So I see your name on a pre-approval. I get the warm and fuzzies, and I can call up and I can encourage my sellers. Hey, Mr. and Mrs. Seller, I just called the lender, verified these buyers are great. They already have their tax returns in, or even knowing because of the relationship with the lenders. Hey, well, you know what? We didn't get this far. We've only got up to this point. And so, I know I'll be able to keep those lines of communication open, which in turn will make my sellers feel better.
Yeah, and you bring up such a great point, big picture on that. Local, right? Local marketplace,
Right.
local real estate agent, local attorney, local mortgage lender, local everybody. Because everyone's in the same community and everybody has skin in the game. It's very hard to hold an 800 number accountable.
Oh no, yeah, and that's exactly the key, the accountability. So the accountability of a local lender is, well, I'm going to see you next month at the spring fling, at the board party, right, at the networking event. I'm going to see you. You're going to, oh, well, you want to come and speak in my office? Well, remember when?
Right.
Right. So there's definite local accountability versus you're right, calling. And look, big companies, big box companies, they're fine. Of course, we know that they have billions of dollars to lend out, and that's great, but there's no accountability.
Right.
So there's that balance. So
And, at times they can have billions of dollars in advertising budgets too that
You
get
got
factored
it.
into the rate to the consumer.
that's right.
So it's definitely something to keep an eye on.
Right. So when I look at that as well, when working with the buyer, is that big bank going to give you the best deal, and or there hidden fees in there, and so on and so forth. So that's where that comes into play as well.
Good stuff. So shifting gears to something else. So at the break, Nick grabbed us.
Yeah.
And he told me and Dino we're too old, and we didn't talk about technology enough.
True.
And how much it's changed
right.
the industry. Well, we
right.
are old.
Yeah.
We still look pretty good.
Thanks. I try.
We both have hair. Look at our hair.
I have full head of hair. That still works. It's getting very salt and pepper, but I still have hair.
Yeah, it looks good.
Thanks.
I ended up with my hairstyle. I used to wear my hair spiky.
That's right. I remember that.
And one day, my wife, Rachel, came up to the bedroom and she put a picture of the guy who plays Captain America. And she
Okay.
says, that hair would look good on you.
All right.
Translation, that's your new hairstyle.
Yeah. You need to do this.
That's it. We did it. We implemented. I'm a giver, Dino,
That's right.
as you know.
I'm a giver. I'm a giver.
So let's talk a little bit about technology.
Yeah.
And,
yeah.
and how much you were talking about 2003 with, I think it was Realtor.com first came online. Ironically enough, that's how I ended up in New Jersey for the mortgage company I was working at the time up in New England. I got transferred down here to work in a new project. And the new project was .com.
Okay.
Type lending. That's how I ended up in New Jersey.
All right.
So what have you seen from a technology standpoint that have been some of the biggest changes in the industry?
So, now we're looking back from 20 years moving forward. The challenges have just grown. Well, and technology has helped us and hurt us. And with everything from, so jokingly, but not jokingly, Realtor.com, they had, what was that program? my mom used to subscribe to. It was like the featured homes,
Right.
right? So you could buy the featured homes, and your listing would appear first at the top. And okay, that was great. Well, that attracted buyer leads. Well, with each change in technology, we have to adapt and learn to it. So then there's, well, all right, you have a buyer, Mike Smith, from 123 Main Street, whatever. Well, how do you convert that lead? Because you can't have a conversation. Because prior to that, what did we do? Buyers would drive by signs and call you, and you can actually have a conversation. Well, now we have an internet buyer. Well, I can't have a conversation with them, so what do I do? So we had to learn how to do that.
Sure.
Fast forward 10 years later, what was it, 2015, 2016, Zillow became very relevant in the marketplace.
Extremely. I can remember being solicited by Zillow in 2008
Okay.
in my mortgage office because they wanted us to buy space because they're really just known for a valuation company at that
Correct,
time.
right.
They weren't the size they are today.
Right.
Anyway.
No, you're right. So now from where they started, then, I mean, essentially what they are now, when you really boil it down, they're a marketing company.
Right.
And so they market houses, pretty pictures, right? That's the first thing you see when you go on your phone or your computer. They market the product. And then they give some basic information. Well, that has now grown into a whole, they have dominated that industry. Will they dominate it forever? Probably not.
Who does?
Right, who does, right. So, but for now, they're very relevant in the marketplace because every buyer goes on, they look at the Zestimate, they look at all so.
You find the Zestimate accurate?
So I never poo-poo anything. I never downplay anything. Sure. It has its space in our world because, to be honest, it's a neighborhood average. So is it fine-tuned to be exact? No. But is it in a ballpark? It's usually in a ballpark.
Right.
So now sometimes it's high, sometimes it's low. As new comps come out, they readjust. But when you how do we arrive at market value? Well, right, you look at location, right? Is it a highway? Is it a main road? Is it a tertiary? Is it an inside street? Is it at the end of a cul-de-sac? And so on and so forth. So there's addition and subtraction into each one of those factors. Square footage, amenities, and go forward and forward. Does it have a basement? Does it not? And so it's all an opinion of value. So what Zillow does, and Zillow also, they purchased Trulia. Well, they come up with it's an approximate. There's nothing wrong with it.
Right.
Now, as a realtor, you need to fine tune that. And if you're a buyer or a seller, you should look at that and realize it's an approximate value. It's a ballpark. And then you should speak with your professional and say, okay, how do we fine tune this number to come up with the actual? And then in this market, even then, well, we're all guessing a little bit because who knows where the buyer is going to take it with, right, with 37, 38% less inventory.
It's a good tool, right?
It's a tool.
Right? It's a
just
tool
like
to
anything
use.
else.
But I've always felt in this industry, you can never replace the human being. Because at the end of the day, you're the person who's going to go in the house and you can see all the new things done to the house and what makes this person's house different. So you can really account for everything that goes into the value. But it's a good tool.
Yeah.
There's a lot of good tools out there.
It's a starting point, and there's nothing wrong with it. So if you're a buyer, though, and you're looking at this, it's not gospel truth. This is 100% on point, accurate. There needs to be adjustments.
Sure.
And then, I look at it, it's an opinion of value. You speak with two different realtors about the value. They should arrive at approximately the same number, but probably not exactly.
Right.
If you had two different appraisers go into your home, it's an opinion of value. They'll come up with
It's the
similar
Kelly
numbers.
Blue Book.
Yes.
Right?
The
So
Kelly Blue Book.
right, it's the Kelly Blue Book. What's my 72 Chevy worth?
Right.
Well, they give you a number, but it's never the number that
never
you're
the
really
real
going to
number.
get when you trade that car in.
Correct. And then now that applies too, right? So are you selling it to the dealer, or are you selling it to a person, an
That's a great
individual?
point.
Or you're selling it to a Chevy collector who absolutely needs this car and loves it.
Right.
My grandfather had one, and I remember being in the back seat on our way to Six Flags, and right, who's willing to pay more versus so. Opinions, the opinion of value changes accordingly,
Right.
and that always comes into play. Be it an appraiser, be it a realtor, a listing agent looks at it differently, a buyer's agent looks at it differently, and Zillow is really just an algorithm, just adding and subtracting numbers. So it's a base,
Sure.
and it's an average.
5 different
Nothing wrong
consumers
with
can
it.
look at it differently.
Correct.
Right? At the end of the day, the real estate's what the market is at. And that's why you need a professional involved in it.
Right.
You know, from a mortgage standpoint, I look at technology, and I don't want to mention any names, but I read the other day that one mortgage company, big mortgage company, just laid off 4,000 of their people. Right? And they laid out 4,000 of their people because they're just a profit center. That's it. Profit center. Rates
That's
are
it.
low. We're going to refinance. We're going to do this. And at the end, they just cut.
Right.
And it really reminds me of some of the things that were going on in 2009, 10, 11, where you saw a lot of mortgage companies exit the business for that reason because they just weren't focused on home buyers. Right? What's the process of someone buying a home? And, you know, having the human beings involved with it, not just the online companies, I think just make a huge difference.
Right.
So what else from a technology standpoint have you seen? And maybe even in your day-to-day?
Yeah.
You look at even your phone for the lock boxes, like everything's changed.
So some of it I think is fantastic.
Yeah.
So some of it is absolutely great. Now you're laughing. So back when, right in 2005 and 6, the market was hot, and we used to keep a stack of buyer folders in the back of the car, and we literally hand wrote offers up on the hood of the car, and then ran back to the office.
On the 72 Chevy.
Right. No, right.
We're not that old.
No, we're not that old. No. I had the Jeep Cherokee back then, cherry red, right? So anyway, but go and then fax it over to the listing agent or throw it on the copy machine. So I had a copy and hand deliver it to the listing agent. That was impressive, personal touch. So the technology has changed that because now I'm not good enough to do like a contract on my phone, but I can sit at a computer, use .loop or DocuSign, and send that contract to multiple parties.
Sure.
You know, we had a listing, and I had one seller. It was an estate. One seller was in Florida. One was in Virginia. One was in New Jersey. Had all three parties sign it within the hour. Like literally, I got on a Zoom call. We did a video conference, and we did like essentially an appointment on video conference. They interviewed me. I did the paper. 45 minutes later, I had signatures back from 3 parties in 3 different states, and it was done. And that was kind of nice.
Right. Well, I mean,
really nice.
Yeah. I mean, it has huge advantages as far as being able to facilitate the business more quickly, efficiently.
So the disadvantage now, because I'm a little more detail oriented most, is that I'm aware that people don't read through the fine print most of the time because, well, it's just on my phone. I'm just going to look at that real quick and peruse through it. So I would still encourage, as a consumer, you should look and see what's on that paper, print it out if you need to. Some people, they tell me like, oh, I'm embarrassed. I like to print it out. Don't be embarrassed. Print it out, get a highlighter and a pen. If that's your preferred way of reading through documents, do it all day long. And then go back and utilize the technology for signatures and so on and so forth. So the technology is there to help us, but not necessarily replace some of the ways that you're comfortable with as a consumer. So that's huge.
You know, it's funny, what's popping into my head while you're saying that is just understanding the process, right? So someone selling a home, it's a different process for them than someone buying a home. Different process. You can't read that online.
No.
You can't get the complete thing without speaking to somebody.
Right.
From a mortgage standpoint, it's the process. You have to understand how things work start to finish because it just makes you more savvy in that space.
Right.
And to your point, we want to leverage technology to make things much more efficiently or make things much more efficient and be able to leverage time. But at the end of the day, the personal touch with dealing with the individual.
Right. So I always try to lean towards looking at a lot of the technology. Does this help me have a better relationship with the client? Does it help me have a better relationship with the agent?
Right.
And some of it's fantastic. We're talking about those, the lock boxes, the electronic, and essentially it's great because I can assure the seller, hey, look, we know what agent is going and tracks via an app. We know who's been in your house, what time they went in and what time they left. As a seller, I would feel, okay, that kind of puts me at ease.
Sure.
It's a huge thing. So there's 100% accountability when it comes to showings and so on and so forth. So technology has really worked in our favor in that area. The MLS, the features have they've gotten so much better. Now even there's different platforms and Flex and Matrix and a couple of smaller private companies that are even not as, the platforms aren't as good, but there's still, now you can go through, click through images, have automatic emails sent to you. Well, that's been around for a long time, but You get personalized alerts. And so these things are all tools that help us. I embrace the technology, but I have to admit, because of my age, I have to really make an effort. I fall behind on it, you
Right.
know. I do like having the paperless, the paperless folders. I walk around with a lot less in my briefcase than I used to because everything's pretty much accessible on a cloud.
Sure.
And that helps, of course. The unfortunate part is the real estate commission comes in and says, "Hey, we want to see. We had a complaint on such and such a file." I can, oh, let me sit down and in 5 minutes pull up the documents from when and download that, print it out. They usually want to see it or email it to them, and it's all still there. I didn't lose
Right.
the papers. They didn't fall. They're not in the wrong folder. They're not in the wrong folder in the wrong filing cabinet. That was every day. That used to happen. So, one of our agents, oh, they put this and what, and I have to dig through, and so it's there.
A good question for you, Dino. Where do you see the technology going?
That's a great question. That's a tough one because I this is where I feel old. I couldn't have imagined it being this good right now.
Right.
And we have everything from the database management, so we have the potential to keep in touch with past clients in a way that we've never been able to, and reminders. Hey, it's so and so's birthday, and hey, it's so and so's house anniversary, and
Right.
so I mean those things are freaking awesome, right? So you really look at it. They're all there to help us and help us do our business. The technology in the future, the only concern I have, and I don't know where I see it possibly going, is if it becomes too much into play, where I guess the consumer thinks that they can sell and buy and just replace.
Right.
So we all know, and you take that, you can apply that theory to any industry.
WebMD.
Yeah, WebMD
Right.
does not replace your real doctor.
It's there's so much information out there. I really find our jobs today.
Right.
How do you take all the information and chunk it down so you can disseminate it in a very effective format to the consumer?
Well, so half of that is where the technology can't replace, because now, all right, we're going on 20 years later. We've seen the changes in the industry, positive and negative, and we can apply all that experience and knowledge and say, okay, well, this is what's happening today, and this is where I think the market's going. So, Mr. and Mrs. Seller, I think, if you're looking to, I met with someone this morning. They're not ready to sell now. We're really looking at 6 months from now. The new construction won't be ready. But trying to anticipate, and they're trying to plan accordingly. They're super smart, and they're already, they're fast forwarding to the end of the year. Forget about March. Their brain was on December of 2022 and into January of 23. So, and I appreciate that because they're collecting all the data and making a good decision. Well, chunking all that information down requires, well, okay, this has happened in the past. This is where I believe we're going. I can look at the market data. This is what's happening. We have different sources. So we look at, okay, the board provides us with some type of data, for market statistics, local markets. That we have, of course, economists that, of course, give us more statistics, bigger picture. Watch the news. You put all these things together. But now you take all this information and we have to essentially make it digestible, right? And so at the end of the day, I hate to say it, I mean, obviously we're sitting here for way too long, right? Probably talking, and we can spew all this information. At the end of the day, you have to realize, what is my individual client looking for? And so you have to actually share that information to how your client wants to receive it. Some people don't really care. Some people are not sitting through your 45-minute presentation about how great you are, and then how great your company is, and then all the market data from the county and the town and the neighborhood. Some sellers just want to know, what's my damn house worth, right? And that's that's what you should give to them. However, someone who's like this morning, who's pre-planning for 9 to 10 months from now and 11 months, well, those people, they may want some more information. So The answer to the question is really dependent upon your consumer, dependent upon one of the major things that will never change in our industry, regardless of technology, is service. But in order to, not everyone requires the same amount of service. Not everyone wants or needs the same amount of service. So, as any salesperson, but especially in mortgages but especially in as a realtor, we have to be able to speak with our sellers how they want to be spoken with. We want to give them the information that they're looking for.
Yeah.
Now, and then it gets very interesting when you have to give them information they don't want. When you tell them, "Oh, I'm sorry, your house is worth," we used the $100,000 barrier. Your house is worth $100,000, not 150. I'm sorry that your neighbor told you, or the UPS guy told you your house was worth more. But it's just so we have to go through. But so there's the delivery, and then you may have to delve in a little bit deeper. But how does your client want to receive the information? What do they care about? What are some of the important factors to them?
I couldn't agree with you more. And that's extremely well put, because at the end of the day, it's understanding what an individual needs. And reading something online or trying to do research, that can be very beneficial for some people, whatever segment of the population that is, that analytical 20%. But then to your point, you got 20% that doesn't care at all, and it's really the people in the middle. And how do they want to be communicated with? How does everyone want to be communicated with?
Right.
That's extremely important, because if you're communicated with in the fashion that you need to be, that a consumer needs communicated to,
right,
they digest the information.
Exactly.
Just like us as consumers.
Right.
I'm going in to buy a car. I need certain things that someone needs to tell me.
That's right.
And certain things I don't care about.
That's right.
So
that's the huge factor that comes into play, regardless of how much information and technology you have at your fingertips. What does your client really want? Right. What do they really care about? What factors are important to them? How much information? Because I've had people up front tell me, "You got 30 minutes to wow me. Bottom line it," and it's like, and I'm out. And then, and what do? I can't go through the whole. And then other people, they want to read my resume. I've had in the past. Can we see your resume before you come over? So you're right. You have the pre-listing packet. You send it over, and including all your things, wonderful things you've done, and how many awards you win. And then you have other people tell me they just don't care. They just don't care. They don't care how many times you made platinum or gold. They just don't. Right. They want how much money are you going to get me, and how do you plan to do it?
Sure.
And you really need to be able to communicate that effectively.
And I think that kind of big picture, not to make it so grandiose, but really understanding people and communicating with them in the right fashion. It's our industry.
All right.
It's the whole world, right?
All right.
And look at all the things going on in the world. It's really, can't we all just communicate in the fashion that everyone's happy with, right?
Right. So I believe as we go forward, regardless, so there's the technology will get better and better at providing us with information. However, it's what we do with it.
Right.
So going forward, when this applies to from the broker position, how do we communicate the information, changing in rules and regs, changing in laws to the agents, and then how do the agents communicate to their clients? Well, again, there's the communication, but then ultimately there's the service. So whether a house sells in 3 days or a house sells in 3 months, or if, God forbid, we go back to that market where a house sells in 3 years, well, what type of service are you providing? What type of service is your client looking for? And you need to adjust accordingly.
Yep.
Because many people, again, it goes back to the communication. Their realtor didn't communicate effectively all the great things that they did. Some realtors don't do any of those things. So if you're a consumer, well, what does my agent intend on doing? Snapping a few cell phone pictures, putting some big, skeleton and the skeleton listing in, and
along those points, before I lose this thought, is, from a consumer standpoint, be prepared with the questions.
Yeah.
The things that are important to you if you're going to sell your house, if you're going to buy a house, right? So specifically what to ask, and it's another reason why you need to call an experienced real estate agent, experienced mortgage person, right?
That's right.
So you can be led down that path.
Right. So a good and bad thing, again, with going back with the technology, is I know we're all impulse buyers. So you click, you go on, pick your favorite housing website, click call agent. Well, you do that and you speak with 6 or 10 or a dozen agents. ultimately, if you stumble upon a good agent that you trust, you should really stick with them. You keep doing that enough times, you may get an agent that A, doesn't know what they're doing, to be really honest, doesn't have any experience, and even a newer agent sometimes will work their butt off for you a lot. So it doesn't have to be the criteria,
Right.
but who's mentoring them, who are they accountable to? That's a factor. So what are you looking for as a consumer? That should translate into who you're working with. But if you keep spinning the wheel, you may get someone that you don't really want to, and you may get steered in the wrong direction. And then you can't say, oh, my realtor did, or my realtor sold me. Well, how many of them did you speak with? And how many times did you confuse yourself by talking to getting too many, right? Too many cooks. How many people can you have in the kitchen making the stew?
I've always felt the best way to, if you're buying or you're selling, referral from someone that you know.
Oh, always.
Right? I mean, it just seems the most efficient way. It's inherently less transactional.
Oh, yeah.
Right? It gives people the opportunity to get to know each other a little bit because you have a common person
Yeah.
that you both worked with in the past, so or known in the past.
Yeah, I agree. So the technology will be there for the information, but the service and the referral and the trust that comes from one-on-one, and the technology can't replace that.
Yep.
And if it does, I think it would be for a short period of time, and then we'll go back. So it's applicable to a lot of different industries. Oh, I can buy a car online. Well, wait, now that I have this car physically here, I don't like it. Right? Well, the website said it was great. Well, it's not really how it worked out. Oh, I can book my own vacation by myself. Well, wait. So the travel agent actually knows, and the travel agent does all these extra steps that you didn't even think of doing.
They've been there before.
They've been there. They know.
Right.
They know the bartender at the and so they know the maitre d' at the restaurant, and so these are the things that you didn't even think of taking into consideration. Where it's the technology's there, so I can. Just because you can doesn't mean you should.
Right.
You know.
Good point.
So that's where, going back and as a message to realtors, as the market changes. Right now, the market's super hot, but we know the pie is not, going back to the very beginning, we know the pie is not big enough to feed everyone.
Right.
So 15,000 as we approach 16,000 agents in Monmouth Ocean County. Well, I'm going to gather probably within the next 5 years, we're probably going to lose probably 3,000 to 4,000 of those.
Mm-hmm.
Well, if you'd like to stay in the industry, what's your value? What are you providing?
Mm-hmm.
What type of service are you giving? You know, the things you do today, people will be able to see online 2, 3, 4, 5 years from now. So is your marketing today going to be impressive 5 years from now? Well, it should be, because you're not the listing that you're marketing today, people are going to see next year.
Mm-hmm.
If the market turns in 2 or 3 years or whatever levels corrects, well, is that going to be impressive to a seller a couple of years from now? I mean, I've been very fortunate where people have called me up and said, "Oh, you know what? I saw some of the things you did on this other house," and I'm like, "Where who referred you?" Because we do a mostly referral business. No, I just saw your stuff online and I liked it, and I'd like for you to come over.
It is a great picture of you.
Right, thanks. That was. It's only a few
Before
years
the
old,
beard.
but marriage aged me. You know, a child aged me.
Made you better.
Made me right. Yes, better.
Well, Dino, I really appreciate you taking the time to be here today.
Thanks for having me.
Thanks for coming. Thanks for all the great information. If someone was looking to get in touch with you, what would the best way to reach you? What would be the best way to reach you?
Call or text me. My number is 732-771-3881. Or, yeah, that's the best way. Call me, text me. I'm here, whether if you're an agent, I can answer questions, help you, guide you. If I can't, which many times I'm really just going to guide you in the right direction, who else should you be speaking with? As a consumer, even though I can't help you, people say, "Oh, I know you're in New Jersey. Do you service Fort Lee?" No, that's 2 hours away from me. But I know a great agent up there. I can help you, guide you in the right direction. Even if I can't, I can try to always
That's great,
help.
Dino. Could you give your phone number one more time?
732-771-3881.
Fantastic. Well, Dino, thanks again for being here today. I appreciate everyone taking the time to listen, and we'll look forward to catching you up on next week's podcast. Thanks, everybody. Thank you for tuning in to this week's edition of Your Mortgage Process, hosted by Greg Wareham, produced by Greg Wareham and Nick Pavis at The Social Rift, and executively produced by The Social Rift. Thank you again for tuning in, and we look forward to catching up with you next week.